Is it possible that one company can mesmerize an entire industry? When it comes to Nvidia, absolutely. On the cusp of its latest profit report, Wall Street is collectively holding its breath. A heavy hitter in the semiconductor industry, Nvidia has ridden the whirlwind of artificial intelligence hype to become one of the largest and most talked about companies in the stock market today. With a total valuation soaring over $3 trillion, key players in the stock market are anxiously awaiting the financial update that could shape the future of AI investments. What makes Nvidia so intriguing? It's not just the stellar revenue that has amassed over the past year, up a jaw-dropping 111% to $28.65 billion. It's the enormous impact this single company has on the entire S&P 500. Hello everyone, and welcome back to Investocracy.
Expect them to have similarly dramatic moves, or is there a major rotation that you're expecting?
Well, John, we've already witnessed this happen in large caps. NVIDIA's risen 40% in 8 trading days. So when someone says the Russell 2000, which is made up of even cheaper companies, can't rise 40% in the next 5 months, they're forgetting that we've already seen huge moves in the mega caps. I don't think the mega caps have to go down.
Do you expect it to happen in isolation with the small caps is what I'm getting? I know that NVIDIA's done that. Some other stocks have done that themselves. But if you're talking about all of the small, the small caps as an index moving up that much, what do these other things do?
Well, I think that a 40% move in small caps doesn't mean the rest of the market goes down. I just think that's going to highlight that the market is broadening, which is something we all expect, but it's also basically doing a risk-reward analysis, which is, look, I think if you can get 18% earnings growth and pay 10 times earnings, perhaps that's a good risk-reward. And I think money that's on the sidelines or people who've been thinking bonds are going to be and cash is the place you want to stick for the next 5 years, but if the Fed starts cutting, they're going to look for places where there's good risk-reward, and I think that's small caps.
Do you need dramatic cuts for that thesis to pan out? Or are there other potholes in the road that you see that threaten your thesis?
Well, a recession would be negative. I don't think the Fed has to make major cuts. It actually just has to. I think the market narrative that would be the best for small caps is the belief that real interest rates are too tight now, 5.5% versus inflation trending towards 2%, and getting rates back down to a neutral rate of 3%. If the market believes that, they don't need the cuts to be front-end loaded, but they have to believe we're going back towards neutral. I think that'd be a huge catalyst for small caps.
Okay, now let me ask you about more about mega caps and about the consumer. How important, not necessarily just to small caps, but to the whole market narrative, will Nvidia earnings next week be?
Well, Nvidia is really important because it's underpinning really what is driving the U.S. economy, which is a real push towards productivity, using basically digital tools and automation. That's a very important disinflationary trend. And of course, the U.S. companies, all of the big ones are all the U.S. I mean, it's a global phenomenon that benefits U.S. companies. So I think it's incredibly important. But Nvidia, trading at 26 times forward earnings isn't that demanding a stock either. So it's not like I would say sell Nvidia to buy small caps. I think Nvidia is still a long-term buy.
Now, what about the holiday season and the consumer who's very stretched, particularly the working class consumer? What kinds of numbers perhaps did you expect to see at the beginning of that season? Oftentimes that can set the tone for how retail stocks and some other things perform.
Yeah, the consumer is under stress. I mean, it's known that things that are high interest rate, like credit card, auto loans, HELOCs, adjustable rate mortgages, these are all subject to Fed policy. It's been a very penalty rate for consumers when inflation's coming down and they're paying these very high rates. So cutting rates would be a tailwind. Falling gasoline would be helpful as well. And I think the third is CEO confidence and has been put on hold as long as the Fed's been tight. If the Fed starts to signal a rate cutting cycle, I think businesses will start to be more expansionary, and that's good for consumers as well.
Influential figures in companies like Alphabet, Morgan Stanley, and Bank of America have their eyes peeled, questioning whether Nvidia can continue its meteoric rise or if we're on the brink of another tech bubble burst. But enough with the teasers. Let's dive into the intricate web of factors that make Nvidia's upcoming report one of the most vital barometers for the stock market's health, shall we? But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
But the guidance isn't what people are expecting. What does that do to the stock? What do you think it does to the market?
It's all about the guidance. But all, I mean, we just got back from Asia. All of our checks are showing Street is still underestimating this acceleration. Because right now, the only game in town is Jensen. And really, if you look what NVIDIA is doing, especially from chips coming forward, this enterprise demand is just starting. And in my opinion, of course, Powell, Jackson Hole is so important.
Huge, obviously.
But the market, what it's going to do for the rest of the year, and I could argue even into 2025, it starts with this NVIDIA earnings. And I expect, get the popcorn ready. It's going to be a
You say this every quarter, Dan.
No, but this is going to be a showstopper showing where the revolution's going.
Okay.
And I think the skeptics continue to get proven wrong.
What about the questions? The air pocket between different iterations of their chips, some of their customers making their own chips, and the fact that the AI enthusiasm seems to be dying down. You're not concerned about any of that?
Yeah, so it's hit on them. For a delayed 2 to 3 months, I view that as sort of an asterisk. In other words, this is not moving the needle in terms of from a demand perspective. When you talk about AI in terms of some of the hype, look what we saw from the hyperscalers. Amazon, Google, Microsoft, what Nadella talked about, what Lisa Su and AMD, the Messi of AI, Palantir in terms of the use cases. It's showing that now the second, third, fourth derivatives are just starting to play out. So when I look at what the godfather of AI, Jensen and NVIDIA are doing, we're talking about transformation. I believe a year from now, this is a $4 trillion market cap along with Apple and Microsoft.
By the way, you changing his last name. It's Jensen NVIDIA. It's not Jensen Huang anymore. You just decided?
Look, this is...
You're making decisions. I want to get back to your note. According to your research, for every dollar spent on NVIDIA chips, it kind of flows through to the rest of the tech sector to $8 to $10. What does that mean for some of these other stocks?
That's the most important thing. Because remember, it's not just about NVIDIA. It's about the multiplier. It's about the revolution, the $1 trillion of CapEx. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across the rest of tech. That's why it's so important in terms of what NVIDIA says for this bull market to continue.
So you're saying it's a broad tailwind. It's not just it's a rising tide that's going to lift all boats.
Because it's not just
even in software, because software seems to be under pressure, or at least it was when it comes to this AI craze, and it seems like a lot of the money that was going to software has gone to chips.
But even next week, you'll hear from Benioff and Salesforce. What are they focused on? AI. Look at McDermott and ServiceNow. In other words, it's just starting now. The software wave is a second, third derivative. That's why I think we're seeing here a year from now, NASDAQ 20,000, and it continues because now the rest of this party, it is only 9 p.m. in the AI party
that goes to
that
when?
We believe it goes to 4 a.m.
To 4? Not to sunrise, but it stops at
4 a.m. And look, will there be times music stops and there's glass in the floor? Yeah. But right now, what we hear next week, it shows this party, the music continues to play on.
All right, I know tech is really your wheelhouse, but you look at the broader market as well. We're going to show a chart. This is the Mag 7 and the S&P equal weight since the start of this quarter. The equal weight outperforming the Mag 7. When it comes to that Mag 7 trade, how important are these earnings? We had our data team run the numbers. Implied volatility post-earnings, 10% up or down. What do you think this report does to that mega cap tech trade, that AI trade, et cetera?
They're the torchbearers of this rally that continues. And I think it's just the start. Look what's happened with Apple in terms of the new iPhone launch. The AI story will be led.
So NVIDIA stops the broadening? Because that's what we're seeing right now with equal weight. It's the broadening of the market. People are putting their money in other places, especially cyclicals, ahead of a cut. So you're saying that this report could actually change some of those flows?
Oh, I think it does. And I think ultimately tech will lead the market higher from a large cap perspective. We look into year end, and I think Mag 7 actually outperforms. But look, but again, many have been skeptical. The bears in hibernation mode, they've been negative on big tech for the last few years. But when it comes down to numbers, and it comes down to this revolution, this is the 1995, almost 1996 moment, but not a 1999 bubble moment.
In the realm of finance, Nvidia has become somewhat of a stock market messiah, an entity capable of miraculous returns even amidst market uncertainties. As of next week, with the anticipated earnings report, analysts and investors are slowly acknowledging the unpredictable nature of Nvidia's rocket-like ascent. According to a trading analyst known by the pseudonym Market Maestro, Nvidia could be poised for its next significant breakout, potentially hitting new highs shortly after its earnings announcement. Nvidia's recent financial odyssey is something even seasoned investors envy. From the year's onset until halfway through, Nvidia's stock skyrocketed nearly 150%. To put that into perspective, that's like watching a sprinter consistently break their world record in every race. No wonder Nvidia commanded almost 30% of the S&P 500's total return during that span. However, with high gains come high risks. Critics have been muttering concerns over the company's astronomical price-to-earnings ratio, standing at over 100 times its earnings over the past year, way above historical norms and general market benchmarks. It's like driving a Lamborghini on a bumpy road. High performance, but with greater risk of a crash. Just this summer, Nvidia fell 27% from its peak in late June to early August, dragging the S&P 500 down almost 10% from its all-time high in the process.
So you asked about what else is going to happen. Every 6 months I oscillate. So we're on it's an even odd oscillation. So at the moment, the gap between the frontier models, of which there are now only 3, I'll review who they are, and everybody else, appears to me to be getting larger. 6 months ago, I was convinced that the gap was getting smaller. So I invested lots of money in the little companies. Now I'm not so sure. And I'm talking to the big companies, and the big companies are telling me that they need 10 billion, 20 billion, 50 billion, 100 billion.
Stargate is 100 billion, right?
They're very, very hard. Sam Altman is a close friend. He believes that it's going to take about 300 billion, maybe more. I pointed out to him that I'd done the calculation on the amount of energy required, and I then, in the spirit of full disclosure, went to the White House on Friday and told them that we need to become best friends with Canada, because Canada has really nice people, helped invent AI, and lots of hydropower. Because we as a country do not have enough power to do this. The alternative is to have the Arabs fund it. And I like the Arabs personally. I spent lots of time there, right? But they're not going to adhere to our national security rules, whereas Canada and the US are part of a triumvirate where we all agree on.
So these $100 billion, $300 billion data centers, electricity starts becoming the scarce resource.
And by the way, if you follow this line of reasoning, why did I discuss CUDA and NVIDIA? If $300 billion is all going to go to NVIDIA, you know what to do in the stock market. Okay. That's not a stock recommendation. I'm not a licensed.
Despite the hype, Nvidia's fundamentals remain robust. The company continues to dominate the AI chip sector, making it the go-to provider for organizations developing their AI models. It's like being the only ice cream shop in town during a heat wave. Demand is self-explanatory. When Nvidia announced the postponement of its Blackwell GPUs to Q1 2025 due to complexities in Taiwan's semiconductor manufacturing company's CoWoS technology, some market cynics viewed this as a potential setback. Yet, according to Market Maestro, this hiccup is simply a logistics issue and shouldn't divert attention from Nvidia's longer-term growth trajectory. The Germany-based analyst further emphasized that Nvidia's quarterly report slated for August 28th would be crucial for the stock's future, possibly setting it on a path to breach its foreseeable resistance level at $129 and move towards a target of $150. Given Nvidia's solid grip on AI technology and its market-transforming upheavals, the credibility in such bullish forecasts might even convince skeptical Wall Street pragmatists. Social media platforms have lit up with both anticipation and anxiety surrounding Nvidia's upcoming financial disclosure. Bank of America strategists, led by Oh-Sung Kwon, have noted that despite market focuses on Federal Reserve Chair Jerome Powell's insights into interest rates, Nvidia's earnings remain the linchpin of current market sentiment. Sarcastically speaking, it's like the financial world can't decide whether to read the Federal Reserve minutes or just binge-watch the next Nvidia episode. In contrast to this bullish aura, the risk associated with Nvidia's forthcoming announcement is also palpable. Should there be even a modest slip below the net income projections of $14.95 billion or revenue expectations of $28.84 billion, the initial public euphoria could quickly turn into disappointment. Per Market Maestro's analysis, a slight miss could potentially trigger profit-taking and short-term selling pressure, turning the stock's relative strength index into a peak pattern, a scenario most prudent investors dread. Moreover, past events have taught an invaluable lesson. Caffeine-induced downtown rallies can fade just as fast. Case in point, Alphabet's recent experience where even surpassing analyst forecasts couldn't prevent its stock from dipping. A similar fate for Nvidia is not entirely off the table. The anticipation is not just digital hype and social chatter. On examining the NVDA stock's performance, it's evident that bullish momentum has been brewing. The stock recently traded at $129, climbing nearly 5% in 24 hours. It's an affirmation of the existing sense of optimism, yet it also adds pressure to the August 28th announcement. If Nvidia manages to stay above the crucial threshold of $129, it might just have the inertia required to push it toward $150. In essence, Nvidia's story is not merely about financial numbers or market standings. It involves a tectonic shift in the tech landscape, a revolution spearheaded by advancements in AI and semiconductor technology. Validation from key market studies and consensus estimates underlines this sense of history in the making. So what does all of this mean for Nvidia stock investors? The answer is easy. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Well, part of it, so we're going to need a lot more chips, but Intel is getting a lot of money from the U.S. government, AMD, and they're trying to build, fabs in Korea.
Raise your hand if you have an Intel computer in your Intel chip in any of your computing devices. Okay, so much for the monopoly.
Well, that's the point, though. They once did have a monopoly.
Absolutely.
And Nvidia has a monopoly now. So are those barriers to entry, like CUDA? Is there something that other? So I was talking to Percy Lang the other day. He's switching between TPUs and Nvidia chips depending on what he can get access to.
That's because he doesn't have a choice. If he had infinite money, he would pick the B200 architecture out of Nvidia because it would be faster. And I'm not suggesting. I mean, it's great to have competition. I've talked to AMD and Lisa Su at great length. Yeah, they have built a thing which will translate from this CUDA architecture that you were describing to their own, which is called ROCm. It doesn't quite work yet.
Now, why should investors hitch their wagon to Nvidia's star? Simply put, Nvidia is not just another tech stock, it's the harbinger of AI-driven opportunities and disruptions. Here's the deal. Nvidia's grasp on AI technology and its continual innovation in semiconductor chips position it favorably for long-term growth. Its financial metrics have shown enormous year-on-year improvement, and even the logistical challenges it faces are viewed by seasoned analysts as short-term hitches rather than fundamental flaws. Currently, Nvidia remains a cornerstone in the semiconductor industry and serves as a pivotal player influencing the stock market at large. Forecasts appear bullish, and while cautionary notes are being struck, they majorly revolve around short-term responses rather than long-term growth. In the high-stakes world of finance, such calculated risks often lead to monumental rewards. Are you one of the market participants caught in the excitement and tension as we approach Nvidia's pivotal earnings report? There's no denying that Nvidia, with its enormous implications for the AI sector, is one of the most dynamic investment opportunities today. As we inch closer to the big reveal, your insights and opinions matter. We leave you with one pressing question. Do you think Nvidia will continue its upward trajectory, pushing towards that $150 mark? Or are we likely to witness a repeat of tech-driven market jitters? Share your thoughts in the comments below. After all, the stock market thrives on diverse opinions and collective wisdom. That wraps up today's dive into Nvidia. Stay tuned, stay invested, and remember, in the ever-volatile world of the stock market, informed decisions are your best asset. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.